Hello, welcome back to WINFXTRADING YouTube channel, the only channel that has been optimized to make you rich trading the Forex synthetic market. Right now, I'm doing a live signal synthesis. The topic is live signal generation on Volatility 251S. I'm going to produce the signals and you will see how I did this, and I'm going to send the signal in the VIP channel, and you are going to see how if you are watching the video, as early as possible, you can also be trading the signal. Okay, so that is it. I'll go to chart and start the analysis. Okay, this is a plain chart. This is a plain chart. We have a plain chart here. This is a plain chart. Basically we start from the monthly time frame. That is the major thing. So in the monthly time frame, we see that price is rejecting this area. It keep rejecting this area. At least the middle candle is a hammer, so it shows loss of momentum from the buyers. So loss of momentum from the buyers. So the next month, the current month is actually selling month. Like it is selling and have some ranges, but it is actually selling and have some ranges. There is not enough rejection from this side. There is not enough rejection from this side, so we expect price to keep coming back to this zone. So we expect price to keep coming back to this zone. Since there is no enough rejection there, we expect price to keep coming back to this zone, possibly to create liquidity sweep that is going to fill this order flow, because here we have some order flow or kind of orders that has not been taken. Buy orders are here because of these rejections. So sellers and buyers range the market here, and where there is range, there are orders that has to be filled. Okay, so price can drop here, but it's very risky to assume that. I can only believe that price will come to this zone. Like we keep reacting inside this zone, but not necessarily here. Okay, because the buy pressure is still there. The market have not entirely changed trend in the monthly time frame. Okay, so in the weekly time frame, we notice that the week, this no week, we are on Tuesday. So this is based on the calendar of market. Synthetic market is the third week because the week starts on Sunday. Based on synthetic, but by Forex it starts on Monday, so the week starts on Sunday. So we have 3 days gone, and the candle is actually creating a dodgy course, but this is not a sign that it will go up, because what determines the final shape of a candle is the price action. So it can change from dodgy course to a shooting star. It can change from dodgy course to a hammer. It can change from dodgy course to a 𝒓𝒂𝒂𝒅𝒊𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂𝒂 their state at any point in time is the underlying price action. Okay, so right now we step down to daily time frame, and you notice that in the daily time frame, price, there is a clear break of structure here. There's a clear break of structure. And what do we expect? When there is a break of structure, we expect price to come and test that structure and continue in the direction of the breakout. And we have this clean trend line. And currently, price is rejecting from this trend line. It break it in the daily time frame, but it couldn't remain above it. So it's showing that the day can close below the trend line. And this is an opportunity. Okay. So there is a resistance here in the daily time frame, because this shooting star you see here actually reacted to that level and dropped, and a massive sell occurred. And so when this price tap here, it started selling, but we need confirmation. We don't want to just enter and expect a big break up or break out to the upside. No. So I'm going to remove this. I'm going to remove this I need to remove this. So we step down to H4 time frame. So in the H4, we see that price retraced with impulse, like it moved quickly to this level. But the impulse is not a strong impulse because it's a retracement. So it moves quickly to this level because it have to. Price, what you need to look at is potential energy in the market. Okay, the bigger the potential energy, the bigger the output signal. So when there are delayed ranges, one market range for a very long period of time without breaking levels, energy are stored in those zones, and once market breakout is going to come back to that, like to those high potential levels and continue in the direction of the breakout. Okay, so that's what is going to happen right here. So um so in the H4 price have tested the structural level that has been broken, and we are now expecting price to come and test this was a very strong resistance, but price has broken. So we expect price to come and test this support. So there is probability of generating this trend line is going to be a fake trend line. So you're supposed to know this is we will have around 5,000 pips. So this trend line, most times you have to know that trend lines are indicators. So price break it doesn't mean it will go up. Structurally, price cannot go beyond this resistance. Why? This range lasted for a very long period of time. So there were a lot of orders. Binance, there were a lot of sell orders in this zone because immediately the breakout happened, not all the sell orders were filled. And so when price came back, it quickly filled those orders and started going down. So this is institutional level. This level is institutional or premium level. And what we expect is a massive sell to this support, even though price can break the support because we are not trading the impulse. But most time we notice that what makes a lot of traders lose money is when their profit goes to loss. And this happens when price react to certain key levels and changes direction. So the price can do that and change direction and still come back to the key level and change direction and come back and do some kind of. So the best thing is to take profit at a level that is more that is less risky. So it is less risky to take profit here than to take profit below this low. This is a low, so this is a lower low. It is risky because it takes a lot of energy to break that low, or even for price to break this support and then come to this low, it takes a lot of energy. Okay, so the energy here is an abstract something, but it does work in the market. It's an abstract something, but it does work in the market. So you have to feel the energy. That's why a lot of people that we are selling from here to here, most of them we are believing that price will just break this, but the breakout is a probabilistic event. It actually happen when you will not expect it. So the best thing is to take profit at those key levels that are less risky, and then when a breakout happen, you continue with the breakout. So here, someone will say there is this candle closes outside this trend line, and so it's going to continue going up. No, you consider the energy, like each structural element have potential energy. The potential energy of this trend line is not the same, is not greater than the potential energy of this resistance. So the energy contained in this resistance is very, very strong to break the trend line and make the trend line useless, and so you see that is a fake breakout or fake out. This is a fake out, and right now we step down to 1 hour time frame, and then in 1 hour time frame you notice that during the retracement, which was an uptrend, price reach here and break a neckline. So it break this neckline with a morning star. So basically we have a morning star whereby we have this candle that was a hammer, and then we'll have a bullish candle, and then a bearish engulfing candle happen. So this is a sign of change of character. And if we step down to M15 time frame, we can clearly see that when we draw the trend line that models this retracement, you see that price are broken out of the trend line. And then we have, there is, let me delete this now, delete this again. And then we have this support. This area was a very strong support. Price also break out of, you see, if price is going to go to a given direction, it will start by doing some gradual, it will start by going to that direction with gradual impulses of price changes, like gradual changes. Okay, so it break out of this support, and you can see rejections. So basically, we don't need to waste much time. We can put our stop loss here. Let's change the color of this line to let's change the color to deep red, so that it will be differentiated. So we can put SL on this line, and our take profits, like the maximum take profit, will be here. There is even other block there. Can place it here. There is other block and that. So this is the other block. So we can place, let's delete, let's yeah, there is other block there. So now another thing that will make you believe this is when you step to the 5 minutes time frame, you discover that price was actually following this plan and break out of the plan. Like you have to run plan analysis and price action to know if plan have changed, because it is plan that move market. Market have to move in plans. Okay. And moving average can help you to know when plan changes. So you see that we have this. If you draw a parallel line to this, so it's, if you draw a parallel line to this, so you see price respect plan so much, but you won't know because you don't know what you are doing anyway. If you know what you are doing, you know that price move in plan, and these plans are pattern, and price maintain those patterns. If price is moving like a straight line, it will maintain that straight line, and that is impulsive move. But if it is moving with zigzag manner, creating a plan of a plan of definite length, then it is going to maintain it. Okay, 2 points, the 3 points are okay to create a plan. If you use the first 2 points to draw one line of the plan, then you draw a parallel line to the first line, so you create a plan. So price will jump from this lower boundary to the upper boundary, and that is where we get the signal of a high risk reward. Okay, because you can easily use small stop loss pips, like the stop loss is gonna be small, and then the reward will increase. Okay, so if you now want to know whether this sell is really going to work, you run indicator analysis, and that will be a moving average analysis. Okay, so I'm going to delete all of this, and I'll step down to another chart where I'll be running indicator analysis and moving average analysis. Okay, I'll be running moving average analysis, and then you see that all this while immediately price, like the output signal after the crossing, there was a crossing here, so an output signal created, which was a buy signal, and then this buy signal have exhausted, and it is exhausted, like it is dead, it's saturated. And then we have a crossing event that started from here to create a processing center where price is gonna range, and then another output signal we create. And so you see that this output signal is a self signal. Okay, so this will be a self signal. So if price tap into this loop, is going to continue going down. Now, what makes this a change in plan is that the curvature or the slope of the moving average loop have changed. Okay. So it have changed. It have changed. The reason why it have changed is because if you consider the buy event, the loop, if you measure the slope of the loop, like just since the loops are parallel, assume the loops to be parallel, just measure one of the slope, take one of the moving average and measure the slope. So it's a positive slope, and then the plane is a positive plane. Is the price action is on a positive, is being modeled or guided by a positive plane. Now, if you check here, you see that the plane is changing because this moving average have crossed and the slope have started changing. That is a like curvature, radius of curvature. You can measure the radius. Since the radius is not zero, it is greater than zero, then it is a change of direction. And then another confirmation is the crossing, and you see the black moving average pointing downwards, and the signal provider, which is the red moving average, is also pointing downwards, and is not the price action is not acting below the loop. Like all the three moving averages is not in such a way that the price action is below them. And so I'm going to send this signal first. I'm going to pause this video because we are about to see we're about to enter a trade. Okay, but before I continue, before I go to the signal to the VIP channel, listen, you see, you don't just focus on the indicator, which is a moving average. Just draw the plane, the active plane, the current plane that models the price action. Okay, because price is going to respect this plane throughout the throughout uh throughout the movement. So this to draw this plane, make sure you get the first line. So the first line is the one that I've completed. So we have this and this. So this will be our first line. So get a parallel line, draw a line. So you need 2 points to draw the first line. And the second line, you just use draw it parallel to the first line. Okay, so this is it. So we don't need to just focus on the moving average. What the moving average shows us is that it showed us the change in polarity of like the change in plane polarity. Okay, now that plane, we have to map that plane, we have to draw that plane by using this approach, getting one line and drawing a parallel line to it. And so when you do this, you mark areas of resistances and support. So basically, we are not trading variable resistance and support. So a variable resistance and support is a minor support and resistance where there is probability of getting accurate entries with a high risk reward. Okay, so here is a resistance. So if price can touch this zone, we are going to be selling. But if price cannot touch it, we still need to make decision because we consider other resistances. So this is also a resistance. So why I'm considering resistance and not support is because we are looking for sell. We are going to be selling. Basically, the slope of the plane is negative, is pointing downwards. Okay, we are going to be selling. So we need resistance for sales to happen. What happens on a resistance is a selling event. And so right here, once price enter here, we sell. But the thing is, most time you wait for price to react to certain level, it will not. So if we are to enter this trade here, the less risky region to put SL is here, because this is a higher low, this is a lower high. This is a lower high because it's lower than previous high. This lower high, price cannot come back to it because it must be a lower high. And so if we put SL here, it's going to cost us over 3,000 pip, which is not ideal, because if we are risking 3,000 pip, then how much are we generating? So what we are going to do is we have to wait. We have to have patience, because it must maintain the plan no matter how it goes. You see, when price want to move from one point to another, it does that, like it does so in a confusing manner. Most time it will appear as if it is reaching the destination, and then it will change direction and then continue back to the destination. Our aim is that we need to patiently wait for price to leave this destination zone to this resistance, so that if we are not taking risk, we can sell here and put stop loss here. That will cost us 2,000 pips, and you see that it is better than risking over 3,000 pips. But since we know that this zone is also a valid resistance, we can just measure the width of the zone, which is 300 pips, and then double it. We can double it. Okay, we can double it, or when we, there's nothing like, oh, you have to be straight. When you are entering here, you consider liquidity sweep, which is proportional to the size of the zone. So this is 300 pips. So you have to consider your intended stop loss price. So you want to put stop loss using a swinging system. So like you consider, since you are selling, you consider a high. So this is a high. So the most nearest high, right? So you want to put your stop loss here. So you enter here, you put your stop loss there, right? So this will cost you 700 pips plus. Now, you're not going to risk 700 pips. What you do is you consider the width of this zone for liquidity sweep. That is over 300 pips. So when you add it to the 700, you get around over 1,000 pips. So if you are entering here, you are going to put your SL about 1,000 pips. So our SL can be here. Okay, so this SL is better because it is going to give us a good risk reward. Now, when we have done this, we step down to a 1 hour time frame, and then we see clearly like key levels where there is probability of reversals, because we want to take profit. We want to take our profit before those reversals, right? So this, we are going to take profit here, because this was a very strong resistance that price break. In other words, it's a support. So if price came here, it will be, the support theory will happen. So we don't want to fight with that, and so we can generate up to 4,600 pips. So the risk reward will be around. Let's check the risk reward. Zone will have 1,200. So the risk reward will be like the stop loss pip is around 1,200. So the risk reward will be 3.83. Okay, that is very massive. We know we know our exit. We know our entry. So our exit is this. Let me change the color to blue, to green. Okay. Most important thing in trading is know your exit, know your entry. The exit are the take profit and the stop losses. Okay. Let's change this to green. Okay, I change this. Okay, this, let's change it back to what it is. Okay, now we know our exit, which are the take profits and stop losses. So our stop loss, we're gonna measure 1,000 pips from entry. We're entering somewhere here, like 1,200 pips. So it's around 58.61. 58.61. So let's change the color to red, so to show that is a stop loss. Okay, so this is a boundary problem. You see, trading is a boundary problem. Boundary problem means that it is bounded with stop losses and take profits, and then that is it. Okay, so what we need is optimization of the entry price for high, like for optimal risk reward. Risk reward greater than 3 is good, but risk reward less than 3 is not good. Okay, because this is a volatile market, so you might be losing in rows, but once you get one single trade, you make sure the risk is big. Like the reward is big, the reward is big and the risk is small. So the aim is to risk more and get big. Okay, that's why I'm waiting. It's not that I cannot enter here. Some people will be like, what if it break out of this plan? The general rule of thumb is that it will respect the plan. It will not break the plan. It will respect the plan. See, all you need is 2 points. If you see any visible 2 points to draw the first line of the plan, then the second line is a parallel line to the first line. So you need 3 points, okay, to get your plan running. So I use this point, 1, 2, I get the first line, and then I draw this one to parallel to this. So you'll be like, as this price is moving like this, it will not reach there. It will reach there, but it will take time. It will take a whole lot of time. Okay, it will go there in a zigzag manner. It's not going to go on a straight line. It will just break level retest, break level retest. It will go there. It can even come back to this. Like, I'm going to show you something. So there are many ways price can move. Okay, it can decide to fall down here, go up, fall down again, go up, fall down, and then come back to our entry. So that is the power of patience. So when you come to our entry, we enter. It's gonna take time. So there are 2 ways. You can use a limit order. You can use a limit order like sell limit. So you can place sell limit here, or you wait to enter at market price. So you can use sell limit. I'm going to send sell limit to my VIP. The reason is because I may not be patient to be coming back to this chart and be watching. So I'm going to send them sell limit. If you have been losing money and you are not making it in this synthetic market, even in Forex market and gold market, try to join our VIP. We have 4 categories, and you can basically join any one you like. We have boom and crash group, we have VIP Forex and synthetic group, and then we have US starting and gold group, and then we have binary groups. Okay, so it depends on what you want. Okay, so that's cool. I'll come back like I'll come back when the chart have played out, because we're gonna play straight. We're gonna play straight in, and my subscribers gonna trade the signal. So once the markets play to our take profit, I'll come back and record the video, and then you see that it is like, unfortunately, you may not be able to have access to this signal. I'm sorry, because I would. Okay, for the benefit of those, I'm going to upload the first video for those that are watching live on YouTube, and they'll be able to trade this market with us. But after that, I'm going to create another video showing where our take profit was hit. Okay, that would be cool. But even if market is not something you believe 100%, but even if we have some high-level risk management whereby the take profit, like the trade was closed at certain prices, it will also be updated in the next video, okay? But let's see how it goes.